Good morning and welcome to the SHANTA Gold Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Eric Zuren, CEO. Good morning, sir.
Good morning, and thank you for having me. Appreciate being back on the platform. It's been a few months, and it's great to interact with our fellow existing and prospective shareholders. I'll take you through the presentation that we posted on our website yesterday. It is on the website, I think, under the news category, and I think, if I stand corrected, it's been put into the presentation section as well. We'll go through that, and then we'll have some time for Q&A. As I've done in the past on this platform, I promise to answer all questions. There'll be no filters. All questions will get addressed, and I hope that allows for transparency with our shareholders. Before I start, I'll just caution you, I'll be turning off my camera during the presentation so you can have full attention of the slides and not me. So without further ado, thank you very much, and let's begin. Now, I just want to remind you that Shanta is an East African gold producer and explorer. We're in Kenya and Tanzania, and in Tanzania, where we operate and have been operating for 20 years, we're the third largest gold producer. We ended the year in a strong fashion across all of our assets. We had several positive signs pointing to what we hope will be an exciting 2023. And as we march toward our objective of delivering 100,000 ounces per year of sustainable gold production, we're on track to meet this milestone. And as I said, we're exiting the year in a strong position. We have a healthy balance sheet. Our projects at Singida and West Kenya give a lot of growth, and we'll continue to update our shareholders as we progress. Starting on slide 3, as I said, we have a diversified portfolio. We're actively investing across all of our assets. And in Tanzania, we'll have 2 producing assets in about 2 months' time. And that's when Singida comes into production in March. At our West Kenya project, this is the one just off the Lake Victoria region in Western Kenya. We continue to be encouraged by the drilling results and look forward to a substantial update to the mineral resource estimate at Asulu and Bushingala. So those are the 2 principal deposits there. So we'll have a substantial update in the near future. Our valuation, as it stands today, includes a dividend yield of about 1.7%, and that's something we've been paying continuously for 2 years since we declared a maiden dividend. And Shanta is supported by excellent, long-standing, high-quality shareholders that own 42% of the company, including the directors that own 6.5%, and myself. A few words on our quarter 4 production, and then we'll go into some of the detail in terms of risks and mitigation. During the quarter, we produced 16,741 ounces of gold, rounding out the year to 65,209 ounces of production. So that's 18% better than 2021, but it was a slight miss versus our guidance of 68,000 ounces. Financial liquidity is good, despite us investing $27 million at Singida last year. And at the end of the quarter, we had $13 million of liquidity. Most importantly, and this is the one that certainly makes everyone sleep better at night, is that Singida will transition from a cost center to a profit center in the very near future. So Singida will go into production and will no longer be consuming cash, but will be generating cash. From the perspectives of my fellow shareholders and myself, we're hugely encouraged by the gold price environment. We all believe, I'm sure, that the gold price will go to $10,000 an ounce. I was just on a call with another shareholder who echoed the same view. We're all gold bulls, and even at the current prices, this year will generate somewhere in the north area of $50 to $60 million of EBITDA. So that's a lot of cash flow compared to a pretty small market cap. I'm going on to slide 5 and a few points on the production statistics from the last quarter. So mining of physicals, so this is the volume we mined from combined underground and open pit, showed improvement, particularly toward the end of the quarter when we put measures in place to de-risk the operation. So we'll talk about those in the next slide or two. But during the quarter, we tied an all-time record. We mined 242,000 tons, which was a great achievement. And we believe there's room to increase that following certain optimizations. During the quarter, though, we had approximately 1,200 ounces of planned production at BC East, which was not mined due to delayed drilling from our underground solo rig. We've since taken delivery of a new rig. And we've also had about 900 ounces that was deemed unsafe to mine due to ground stability at the crown pillar. So overall, about 2,100 ounces short in the quarter. What this means, though, is that despite record tons mined, we had those shortfalls. And it really comes down principally to we weren't able to get the stoping ore out of the underground, and we had to rely on development ore and open pit material, which carries a lower grade. As already mentioned, we took delivery of this underground solo rig in December, and already I can see the first 17 days of production so far. We're slightly ahead of budget. So a good start to January in what is usually a pretty soft period. Now at the processing plant, we milled 874,000 tons last year. That is a new all-time annual record. And we also milled an all-time quarterly record, 227,000 tons. So the plant is certainly receiving the material that it is being fed. Underground, the actual mined ore is continuing to reconcile well against grade control drilling. So year to date, in 2022, we were plus 9% on tons, minus 4% on grade. So from all measures being considered, reconciliation is within tolerance, and ounces mined are on track. So the question for us is to make sure we mine the ounces that are in plan, the tons that are in plan, which means getting them out of the stopes. And we've done that by bringing on this new rig. So through the measures taken already and that we're planning for 2023, we forecast that meeting the mine plan and the call for the year should improve, and the reliability of our forecast should be enhanced. Now on to page 6, which is a bit on the guidance for 2023. And I'll start really in characterizing 2022. And 2022 was a year of more complexity than what we expect in 2023. And I'll give you the reasons why. So in 22, we mined from 3 distinct underground areas. That one was the low-grade BC Deep. We then transitioned in April into the high-grade BC Crown Pillar. And then we ended the year moving into the Luika Underground. So 3 different areas of underground mining. You can think of that as more complicated than not. And then on the open pits, we started the year mining at Shamba, and then we moved into Elizabeth Hill. Again, 2 different areas. So overall, more or less 5 different mining areas last year, and that will change to basically 2 mining areas in 2023. So for the year 23, we'll guide to produce 66 to 72,000 ounces. The mine plan is really focused on Luika Underground, which accounts for 84% of all of our underground ounces. And And that's important because we now have, we believe, a de-risked equipment with the new Solo, which has already seen underground drilling improve by 94% in December versus the average 11 months of 2022. Now, material sourced from open pit mining in 23 will come exclusively from Elizabeth Hill, which is at a grade of about 1.8 grams per ton. In terms of production guidance for Singida, we'll set that in a few months' time once we have Singida up and running as a producing mine. Now, in terms of the next two slides, we'll just take you through some of the continuous improvements we've done to de-risk the 23 production plan. On the mining side, on page 7, you can see here, we've brought in a second contractor in the open pits, and that's added about 40% additional capacity to the open pit mining fleet. And we started to see results in Q4 where we've the mined ore was up in Q4 versus Q3. At the underground, I'll mention it again, we've taken delivery of the new underground production rig, and that's ensured that we can mine in line with the planned stopes, the planned schedule of stopes. Onto the processing plant on slide 8. This is an area where it's certainly a focus for us this year. The good news is we've been able to continually improve the throughput tonnage. So last year we were able to get 2,396 tons per day into the plant, which is a 5% increase year on year and 38% up from 2017. And it's not uncommon to be able to optimize a plant by a couple percent every year, but it certainly has been a great trend for us to get more tons into the plant, which helps mitigate lower grades in the reserves. Now, there's certainly an opportunity to increase recoveries in the processing plant, and in this regard, grinding efficiency has improved throughout Q4 following some of the measures we've taken, and that's grinding efficiency really points to having finer material through the plant, which results in better recoveries. So how do you improve grinding efficiency? Well, there's a number of measures we've taken and a few more to come. First one being we've increased the power into the mills, so the mills are moving more robustly. We've reduced the screen sizes, so as you go through each stage of crushing and milling, by having a smaller screen size, only finer material is able to pass through, and bigger material has to be reprocessed. And so that's been a measure we've taken. We've also now just about to take delivery of slightly bigger steel balls in January, and that will mean the material is battered down to smaller fragments. Now, a longer-term initiative that we're looking at doing is adding a pre-leach thickener to the mill. It's something we've had in mind for a while, and certainly has become more increasing part of our attention going forward. So we think that should be $1.8 million or less and have a payback of possibly less than 12 months. Now, turning the page to Singida, where the future is certainly bright, and mine construction is on track, on budget. First gold pour is expected in March. Construction is now 90% complete, and in fact, we had the elution plant, which was the last critical piece of equipment. It arrived in the Dar es Salaam port on Tuesday. So that's very reassuring to see that. Year on year, we took Singida from 42% completion to now 90%. And there's a little bit more money to invest before it goes into first gold pour in March. And that's all on track from what we can see. Here are some photos of the activity at Singida. I first visited Singida in 2017, and it'll be interesting to show photos of what Singida looked like back then. It was a very undeveloped space, and you can see here there's large infrastructure and activity, and Singida's come along a long way. So during the quarter, we successfully cold commissioned the milling circuit. So that's the top left. We added water to that big blue drum, and it spun for I think 4 days continuously. And so that's cold commissioning. Well, we hot commissioned the crusher. So that took place in Q4, and that means hot commissioning means we actually put material through it, and we're now building the stockpile of crushed ore. I think we're at about 25,000 tons of crushed ore as we sit today, which is just under 4 weeks of crushed ore. So that's a big de-risking component for the ramp-up period. The construction of the CIL tanks on the right-hand side was completed in December. We've included space for 2 more tanks, should that need arise, if we wanted to increase the throughput at the plant. And during the period, we continued to do open pit mining, and the stockpile today at Singita is, we reported 14,400 ounces. As of yesterday, the stockpile was 15,100 ounces of mined gold at the Singita plant. So all looking good at Singita. A word or two on West Kenya, and then we'll talk about the upcoming catalysts. We completed 34,000 meters of drilling in 2022 at the Kakamega and Rumula camps. So Kakamega is the top right, Rumula's down around the middle of the page. And there are numerous deposits and targets across these 2 camps. So it's very encouraging. I was in Kenya last week, sitting with the team in Masoli, and everyone's very encouraged by the results. We'll announce a mineral resource update shortly at West Kenya. Hopefully have that out possibly next week, and provide an update on what those 34,000 meters of drilling resulted in terms of mineral resource estimate. Now in 2023, the plan here is to complete phase 2 drilling and then commence phase 3, and that forms the basis of our economic analysis, which is quote unquote the feasibility study, which is so far been started with an internal owners team, and come April we're aiming to add consultants and a new layer of work to increase on that regard. Now in terms of the catalysts, and then we'll open up to some Q&A. I think we'll probably have an updated West Kenya resource possibly before the Singita construction update. Singita construction update is pretty fresh already. So we'll have that hopefully out next week. And then the year-end figures on our reserves and resources at New Luwika. We've already mentioned in the RNS that we added 80,000 ounces at 2.2 grams, following some so we did less than expected drilling during the year, and we still added about 80,000 ounces. So that was good. We'll then have the updated resource out from West Kenya, including Rumula. So that should be out in February. The team's just going through that. And what we're really focusing here at West Kenya is the conversion from inferred to indicated ounces, and really upgrading the resource estimate. So that's on the way. Singita should be kind of into commissioning properly in February, with the elution plant being delivered. First gold bar in March, and our 2022 accounts are expected, I think, the week of March 20th. So lots to look forward to. Excuse me. In terms of VAT, we have a lot of activity in the background, so hopefully I can address this and not have to take any questions, but we'll do if there are any. We currently receive our VAT as current. We since July 2020, the VAT has been refunded on a timely basis. So for the period July 17 to July 2020, there's $23 million of VAT that we're currently discussing at the most, I should repeat, the most senior levels of government in Tanzania. And we have a whole team who are working on the lobbying effort in country to have that recovered and returned. So we hope to have some updates on that, but I've learned to be patient, and I ask that our shareholders are also patient on VAT. With that, operator, I'll hand back to you and allow you to open up the Q&A.
Eric, thank you very much for your presentation. Ladies and gentlemen, please continue to submit your questions using the Q&A tab situated on the top right-hand corner of your screen. While the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed by your investor dashboard. As you can see, we have received a number of questions throughout today's presentation, and thank you to all the investors for submitting their questions. Could I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Thank you. Our first question comes from Nick B, who's asked, has construction at Singida progressed as expected? What further investment is required here? Nick, thank you for your question. Yes, construction is on track and on budget. We are planning for the first doré bar to be poured in March. In fact, I think the plan calls for about 2,000 ounces of gold production in March, but that's the sort of unofficial estimate from an external perspective. In terms of future and further investment at Singida, we have about, in total, I think there's about $5 million remaining at Singida, and that could be managed over the course of about the next 3 or 4 months through working capital. As we incur expenses and we pay them 60 or 60 days later. So Singida is on track. We have the capital to complete it, and the next key deliverable is the installation of the elution plant, which I referred to earlier. Thanks, Nick. E&D asked, in the 5-year plan produced in 2021, guidance for 2023 was 77,000 ounces. Why has it been reduced to 66 to 72? Thank you, Ian. That's a really good question. And when we think about our overall life of mine plan, we're optimizing for net present value. So when you look at the 2022 5-year plan, that plan ended in 2026. Our current plan now, the current life of mine ends in 2028. And so what's important for us is that we get the right balance of production over a life of mine plan, as opposed to simply focusing on the next 12 months, which could leave a drop off towards the end of the mine plan. And so we're always optimizing for net present value. And sometimes that's at odds with investors or shareholders who are really focused on the next 3 months, the next 12 months. But our responsibility is to optimize the plan for the company, for the life of the project. And so, when we talk about 66 to 72, our budget for the year is 70. We believe our internal forecasts show we can get to 72. And so here, this is a question of guiding to ensure that we meet expectations. In terms of next questions from James, what percentage of Singida ounces produced and sold will go directly to Shanta Gold? The answer is 100%. So that's that. Sam M has asked, is it feasible to get New Luika to produce 80,000 ounces again, or the grade's too low to make this feasible? If you track back and look at our annual grade, you go back as far as 2013, so go back 10 years, and you'll see the grade, I think back then was 6 grams, and then it went to 5 and hung around 4 to 4.5. And then the work gets pretty hard. I mean, the grade drops to 3 grams, and this is a function of what's in the ground. It's nothing to do with the people or the strategy. It's really, sort of what's been given by the greater powers, the greater heavens. What have they put in the ground for you 3 billion years ago? And so this is where we are today. In terms of getting back to 80,000 ounces, is that possible? Absolutely. We would look to add a 4th mill to New Luika, and that would be on the back of more reserve ounces. added to the mine plan. As it sits today, it's not, from our perspective, NPV optimizing to make further investment, because that simply just reduces the mine plan and accelerates the end of New Luika. And so we're in a good balance right now, but it's certainly possible to get back to 80,000 ounces through additional equipment and through additional reserves. I'll move on to the next question from Camille. Question 1, Camille's asked is, after adding 40% addition to the open pit mining fleet and tripling the underground stopes, why is this guidance less than last year? What impact does this have on AISC? So you might recall, I think it was in Q1 last year, we reported that the open pit contractor was struggling with their own equipment. And so this was, we had a deficit of about 1,200 ounces from the open pits in Q1 last year, from memory. And that was all reported in the RNS. And so what this does is, adding new capacity does one of two things. One is it diversifies us away from a single contractor in the open pits who we're reliant on and who we're in their hands. And two, it allows us to bring in more tonnage. Now you have to remember, the open pits, the fleet capacity there allows us to mine ore, which goes to the plant, but it's the waste from Elizabeth Hill is also being used for the tailings storage facility expansion. It's an ongoing project to continue to build the walls, and so that capacity is important. Now it gives us more capacity, gives us flexibility, because in any one month you can mine more ore, you can catch up on waste, and you can certainly deal with downtime from a contractor's perspective. So that's the open pit mining fleet capacity question. In terms of underground stopes, our base case is that we aim to have about 3 stopes available for drilling at any one time. Now, the reason it went to 10 stopes is because the underground drilling rig, the solos, were not able to keep up. That was down to power and availability of spares and maintenance. So the additional underground rig, which we brought in December, has certainly addressed that risk and is now busy working through the undrilled stopes. We're getting that 10 back down to 3 and catching up. So that's sort of, again, this is a risk mitigation from to keep the plan. In terms of AISC, really the all-in sustaining cost is a unit number. So the range of the AISC is really driven by production ounces and cost inputs. Now we've already seen, last year we saw with the onset of the war in Ukraine, we saw some of our key inputs like emulsion for explosives, power costs, so HFO, diesel. These costs, absolutely skyrocketed. Emulsion went up, I think, 300% in the course of very, very few months. We've just had our first emulsion price reduction. In fact, I think it was organized this week. So we're starting to see some of these costs come down. We're seeing the benefit of lower oil prices coming through. It is on a bit of a lagging effect with Shanta, the way our contracts are set up. And so you just don't know where the all-in sustaining costs will end at the end of the year. We hope we can do better than what we've guided on, but that's the guidance for the year. There's a lot of moving pieces to that guidance. Nigel's asked, did I hear you say $10,000 an ounce? Absolutely. I think we're all in this together. We all know the greater story. We all know what's going to happen ultimately with the gold. With gold, it will be one of these asset classes that just doesn't go away. I mean, there'll be these distractions like crypto and Bitcoin, and there'll be people talking about this is the end of gold. The younger generations don't believe it. when you look at central bank buying, that is the test. Central bank buying, and that is at levels that haven't been seen in decades. And so, do not be persuaded by the noise. Look at the fundamentals. When China and Russia are buying gold, that is because they want to diversify away from the US dollar. When Saudi Arabia talks about these alternative payment methods, that is because these are geopolitical factors, and gold is one of these ones where it's not tied to a government. There are no IOUs on gold. It is a store of value. And so, yes, we believe in long-term gold upside. James has asked, will the higher head grade be mined from the Crown Pillar continue beyond 2023? James, the Crown Pillar at Bohemia Creek, it was completed last year. And we are now about 84% of our underground ounces this year will come from the Luika underground, which I think the grade there is about 3.6 grams per ton, if I remember correctly. Stevens asked, what's the current timing for mine plan and PFS for West Kenya? We've done a lot of work internally with the owners team, and come April, once Singida goes into production, the next kind of mental transition and capital transition will be towards West Kenya. I mean, that's just the natural next place that Shanta will be investing, and that will really set the tone and the schedule for the economic work at West Kenya. Whether that's in the form of a PFS, we'd like to go straight into a feasibility study. Is the formal feasibility study. We've done all of the vendor discussions. We know which consultants we'll be using. We have a feasibility study manager. He's currently in West Kenya right now with the team working through some of these plans, and he's just waiting for the go-ahead in terms of spending money. So that will come probably in April. When will we get a mineral resource update from West Kenya? Sam has asked that. That will come, plan is next week. We're reviewing the draft RNS now. That should be out next week, is my guess. Nigel's asked, what measures are we undertaking to lessen the environmental impact? Is solar energy significant? Well, in fact, late last year, we actually acquired the solar plant we have from the vendor. So there's a German group called Redavia. Shanta bought it, so we now own the solar plant. And if the time comes where the solar plant is no longer needed at New Luika, it will be shipped off to Singida. It has about 15 years left on its life. It was about a $500,000 purchase, and we're paying that $100,000 a year for 5 years, which is exactly the same that we were leasing it for. So it's a good step forward. In terms of solar, it's still a pretty small portion of our overall energy contribution, and my view is, the world should be moving away from fossil fuels. It's very difficult to do that in mining, particularly where you already have operations that are established, but you can certainly be creative in trying to reduce the carbon impact, the carbon footprint. And so we're always thinking about measures that we can take. And we published a sustainability report last year, which discusses and shares our philosophy on that. Anthony has asked, are grades declining, and what grades are we expected from Singida? So at New Luika, the reserve grade, so the grade that's in the ground from where we have contained resources, is lower than where it has been in the past. And that's just a function of what's in the ground. At Singida, the reserve grade is 3 grams per ton. And, I'm looking at the plans literally in front of me right now. The grades for 2023, 3.04, 2024 is 3.00, 2025 is 3.37, 2026 is 3.67. So these are similar to what we already reported in the life of mine plan for Singida back in October 2020. And Singida, it has a lot of nice features. The first one is it's brand new, all new equipment. largely underexplored, just from where we from the fact that there's a lot to do there still in terms of exploration. So a lot of upside at Singita. James W. has asked, can you give some color on the recent takeover approaches for the company? Absolutely, James. I mean, Shanta is one of these companies, I promise you, that is, it has all of the right attributes. 100,000 ounces of production is not small. And there are a lot of companies out there who have 200, I can think of a few, 300,000 ounces of production. Sentiment reported today 440,000 ounces of production, so not that much bigger than us, 200,000, and yet they're valued at multiples, I repeat, multiples higher than Shanta. And so this becomes very interesting for a larger company who wants to scale up and can do it, literally at a stroke of a brush by acquiring Shanta. Now, I'll give you an example. Shandong, for instance, they are a $15 billion company, and they produce, I think it was 700,000 ounces. And you do the math, the relative ratio of Shanta, 100,000 ounces, $120 million company, 700,000 ounces, $15 billion company. So the hunt is out there. Producers are hunting for production ounces and size and relevance and all the likes of it. We saw Randgold Barrick go together a couple of years ago. People want to get bigger. They want to be more relevant. Mining's really relatively small in the context of public markets. So Shanta is interesting from that perspective. Shanta also generates real cash. We generate free cash flow. We are well established. We have excellent relationships in country. We have West Kenya, which is an absolute gem to continue exploring, and these are very attractive features. So what I would say, my concluding remarks in terms of M&A is, as I've said all along, Shanta is attractive in the M&A side, in terms of the M&A landscape, and will continue to be attractive, and will be incredibly more attractive once Singita comes into production, because all the doubters will be proven wrong. So I hope that that covers that question. And I should say, and this was an RNS, the board will not relinquish control of Shanta to any lowball offers. So I hope that clarifies that. Albert has asked, hi and thank you. What is the expected AISC for Singita and expected production for 2023? We've said that Singita will, on average, produce 32,000 ounces per year. So that's a 12-month period. And so if you do the math, say call it 9 months for Singita, you could prorate 32 and probably come up with a pretty good estimate. We're only provide guidance on Singita come time in March or so. In terms of the AISC, we first published an all-in sustaining cost for Singita back in 2020. Things have moved around a lot since then in terms of, there's been inflation. This is like 2.5 years later. So almost 3 years later. So, we'll guide on Singita. It'll be better than New Luica. And it certainly helps spread the overall costs, the overall overheads across two assets instead of one. But we'll guide on Singita in due course. Camille's asked the second question: how much do you forecast the capex for West Kenya campaign this year? Can it be paid organically? Yes. Last year we invested $8.7 million at West Kenya, I think it was. This year, we've always talked about a $10 million annual budget, and we'll start drilling probably in March at West Kenya, and that somewhere similar, $8 to $10 million at West Kenya, and that'll be paid from from cash flows. An update on how much on the production is hedged. So it's really in two parts for Albert C's question. We currently have, as we sit today, 15,000 ounces under what are called zero cost collars. So 8,000 of those are collars of 1,600 to 1,900. So slightly out of the money, marginally. And I think that would be what 8,000 ounces at $10 would be $80,000. So, negligible in the context of Shanta. The other 7,000 ounces is tied to our working capital facility. So those ounces roll off. They're 2,000 in January, 2,000 in March. 2,000 February, 2,000 March, and 1,000 in April. And those are at a zero cost collar of 17.25 to 17.56. So currently out of the money, but they were put in place with the encouragement of our lenders tied to the working capital facility to ensure that Singita meets the timeline predicted. And that's really important, is that Singita is not delayed for financing reasons, and we've now crossed that hurdle. There's no financing concern with Singita. So that hedging has de-risked that point. A couple more questions here. James has asked, would it be realistic to expect West Kenya to become a production operation about 5 years from now? Absolutely. And the short answer is yes, definitely. So yeah, we'll provide more updates on that, but we're 2 years into the drilling. We've always said we'd like to have West Kenya producing within 5 years of commencing drilling. We've got our work cut out for us to put that all together in the next 3 years, but possible, and that's what we're working towards. Michael B, is takeover still possible? You seem very bullish about that on the proactive interview. I can't comment on M&A. Our role here is to deliver returns for shareholders. My job is to do that through running the company. And if the animal spirits align and there are, proper suitors who think they can certainly do a better job with Shanta and willing to pay a higher price for it, then that's really up to the board of directors of Shanta and the shareholders to take a view. My job is only to facilitate that if that's what the board wishes to be done. Paul's asked, hi Eric, I'm glad it all came to nothing, but can you fill us in a bit more of the detail of the bid speculation? I have spoken at length on M&A already, but it's not uncommon for companies like Shanta to receive inbound inquiries. More than often than not, they're completely, we could call them tire kickers. People who come around, try and float a great idea, and then you never hear from them again. But in this case, that wasn't the story with the counterparts in China, and they were more than tire kickers. But at the end of the day, the board saw more value in Shanta as a standalone than as in terms of what they were offering. And you can see here, gold price moves a little bit, Singita comes into production, and Shanta's share price can go up very quickly, which is what we've already seen just recently. So the future with Shanta is very bright, and the board is just not interested in parting ways at a knockdown price. So hopefully that clears that. Justin said, great job, Eric and team, great execution, exciting years ahead. Thank you, Justin, appreciate that. What's your best estimate for initial production date at West Kenya from mining? It's just too early to tell, Justin. We hope to have something kind of, as we said at the outset, within the next 3 years. There's just so many trade-offs at West Kenya. Do you start at Rumula? Do you start at Isulu? Do you do open pit mining at Isulu and Bushi and then go underground? Do you go underground first? What is it? Do you do a small starter operation at Rumula to get ounces going? Where do you put the plant? Like the trouble with West Kenya is, the irony is that it's so prospective, And everywhere Yuri and team drill, they just keep finding more gold. So then, from a financing and a kind of implementation perspective, it makes it very difficult because you think, okay, that's it. We're going to start at Usula and Bushy, and then out pops the Ramula camp. And, there'll be a couple 100,000 ounces of indicated open pit material there probably next month. So Yuri's making our job very difficult as managers of West Kenya, because he keeps finding more and more gold everywhere. The irony of having a great deposit and a great project, but we'll get there and try and stick to our overall 5-year plan, which is 3 years away. I don't see any more. Oh, sorry, one more question, and this will be the last one because there are no more in the queue, and I think I fairly answered all of them. Kaleem has asked, would you consider selling West Kenya in whole or part once you have a better guide on resources? Kaleem, I'd like to say I'm a dispassionate shareholder. I'm a shareholder, hopefully like 50 other individuals on this call. I'm dispassionate. What's important for me is two part. One is meeting our purpose as a company, which is improving the lives of the people in which the regions in which we operate. So that is core to why we exist. The second is to deliver a return for the people for the stakeholders who put capital into Shanta. I mean, that's, and we do that by producing gold. There are other ways to do that through corporate activity and I think if someone came around to you and said, I'll give you 4 million quid for your £500,000 flat, it might be the place where you've spent the last 20 years living, but I suspect you might consider that offer. And I'd like to think that our board and shareholders would be pretty pragmatic around something like that as well. If there was a great offer that emerged, but time will tell. Thank you very much. Kaleem has said here, Eric, thank you for the session as a shareholder. I appreciate you always give the opportunity to answer questions and concerns openly. I'm true to my word. I'll answer questions, and I enjoy this forum because it allows, as best we can, to interact and have a dynamic conversation. So thank you for the time, and thank you for hosting IMC.
Eric, thank you. And I think you've addressed all those questions you can from investors. And of course, the company will review all questions submitted today, and we will publish those responses on the Investor Meet Company platform. Before redirecting investors to provide you with their feedback, which I know is particularly important to the company, could I please just ask you for a few closing comments?
Yes. The future is bright for Shanta. We've said this in the past, but 5 years ago, we had one asset and $70 million of debt. Now we have 3 assets, $20 million of debt, $60 million of cash flow, and a hugely exciting West Kenya on the horizon. Stick with it. I mean, the share price has done incredibly well in the last 5 years. Whoever's kind of joined me in this journey, stick with it. It's going to be great going forward. And, I thank you for your support and your patience. It's been a very rewarding and excellent journey for all those involved. So thank you.
Eric, thank you for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Shanta Gold Limited, we'd like to thank you for attending today's presentation. Good morning to you all.